This is the Business Breakfast on Dubai Eye 103.8.
With Richard Dean, Brandy Scott and Tom Urquhart.
Earnings season, and it's a special one as well, because not only is the end of Q2, it's the end of H1 as well. Steel prices experiencing fluctuations and mixed trends globally at the moment. Some regions seeing increases, others experiencing price stability or even declines, as we've been reporting with the pressure on iron ore and steel over in China at the moment. They look to get their property market back on track. What's the case here, though, in the UAE? Well, there's only one person to ask, really. EMSTEEL Group, one of the largest publicly traded steel and building materials manufacturers in the region. They, in fact, contribute 10% to Abu Dhabi's total non-oil manufacturing sector and hold a 60% share of the national steel market. Their group chief financial officer of EMSTEEL is Mark Tonkins, who's been kind enough to join us live in studio this morning. Mark, good to see you. Thanks for joining us.
Thank you very much. Good to have me. Great to be here. We have a fantastic half year behind us. Really strong growth, 9% revenue growth. Second quarter, even 18% revenue growth. And that's for a steel business, which is traditional industry, really a very strong performance.
Strong numbers. So is that coming across all sectors of the business?
It is across steel and cement. We see that both. It's on the back of the very strong infrastructure construction market in the UAE. So we are benefiting from that. And that drives volume growth even more than the 9% value growth, because prices were somewhat lower this year than last year. But also the input costs were substantially lower. And operationally, we did a very strong performance. We showed a very strong performance by having our assets well utilized.
Profit always good. Margins sounding healthy as well. How does that sort of impact you and your market position here and further afield?
No, we have a very strong market position, as you already alluded to, in the UAE. We maintain that, and we are able to keep that because we provide the good quality products. We have a very short supply chain. That's our benefit, of course, versus imported steel and products. Because you mentioned China. The China market is a huge market. They're exporting a lot. They're also selling products within the UAE. But our customers in the UAE do appreciate the closeness of us, the in-country value, as well as our flexibility.
You'll be putting a smile on the face of shareholders aplenty out there. Talk to me about dividend plans as well moving forward.
Yeah, we don't have any specific dividend plans. That's, of course, not a static situation. We always look into that. We have a very strong balance sheet, which we like to have. We are exploring actively opportunities for both organic and inorganic growth. But of course, with our board, we are always in dialogue around dividends, but at the moment we do not paying any dividends.
Good first half of the year, as you've just attested there. What's it look like, though, for Q3? And let's go further afield to the second half of 25.
Yeah, for the second half, we're quite optimistic because we see a lot of demand. You just had the Aldar CFO here also earlier, alluding to this very strong market. We are one of the steel suppliers towards them also, obviously. So we are optimistic. However, we remain vigilant. It's not a given that it will always continue to grow. But we're positive, and we hope to repeat the similar performance in the second half year and the third quarter.
You mentioned some of the challenges that the industry globally is facing at the moment, China and their position on steel at the moment. We're also talking about US tariffs this morning, as we have been for several weeks as well. Are they two very present challenges for you?
I wouldn't call them challenges. They're developments which you need to watch. I always say you need to focus on what you can control, and you need to manage these events happening. Of course, with the China growth slowing down, having slowed down, there's a lot of excess capacity of steel, which also will come here into the market. But we just need to make sure towards our customers that we are the better choice. With respect to the US tariffs, we were already for quite some years as steel under the 25% tariff. That has now doubled to 50%. Obviously, that doesn't make it easier to sell products in the US market, even though prices there are substantially higher than anywhere else in the world. And in the short term, the US will not be able to fulfill their own demand of steel by own production. So there will still be sales in the US, but it will be more challenging.
Let's talk about EMSTEEL and the growth of the company, development of the industry here as well. Last year, you invested over 3.5 billion dirhams into local procurement. Why was that important to you?
Now, for us, we are a local player. We want to be part of the global local economy and contribute to that. And that's why it's important. We have our production all here onshore, and that's good for the development of the country and good for our shareholders also.
Good for both of the aforementioned, also good for sustainability in terms of your sustainability visions, goals and targets as well. How is the sustainability, but also, I suppose, the decarbonisation strategy?
Yeah, and I think that's one of our really proud elements of our strategy. We are very well performing on decarbonisation. We are, versus other steel makers, really a low carbon producer. And we're very proud that in June we received from the MSCI a AA rating on the ESG index. And that's the highest any steel company has. So we're really outperforming there. And even compared to other industries or even service industries, a AA rating is very high seen. And we have very strong decarbonization targets. We're taking a lot of measures there. And we're on the forefront there compared to other players.
Steel is still steel, cement is still cement, but is AI having an impact on the business at the moment?
Definitely. We apply a lot of AI. We have kind of 30 AI applications already active within our operations. And it impacts our safety, it impacts our logistics approach. So you have to invest in that. Our Chief Technology Officer drives that initiative very much together with the organization. And we do see the benefits, both on safety, on operability, on logistics. So it's great to see.
Mark, great numbers. Thanks so much for coming in as well. In fact, as I was driving into work this morning, I was coming up Hesse Street and there's all sorts of advertising hoardings promoting the new, yet another spin-off of Superman and Superman's dog, etc. They call him the man of... You're the Man of Steel. You're the actual Man of Steel, aren't you?
I'm the Man of Steel. Thank you very much. Thank you.
Mark Tompkins, really appreciate your time. Congratulations on those numbers. Group Chief Financial Officer of EMSTEEL, joining us live here in the studio. Have yourself a great time.
Thank you very much. Have a nice day.
It's the Business Breakfast.
Download the